Bitcoin just took a hard hit, down 4.2% in 24 hours. The strange part is this. The chart is still sitting on one decision zone, and if that gives way, the next move can open up fast. Chris here with Bitcoin Whale. No warm-up today. Let's get straight into the chart. Quick reset. Yesterday, the bear trigger was 63,198. Bitcoin closed at 62,113, so that trigger isn't theoretical anymore. The bearish setup is active. In a second, I'll show you where today's updated target sits. And the trade from yesterday's red closed green, about plus 3.0 R. Since I risk 1% per trade, that works out to roughly 3% added to the book. Small risk, bigger payoff. That's the job. On the 4-hour, Bitcoin has been compressing into what looks like a symmetrical triangle over the last few days. I'll build the structure piece by piece, so you can judge the setup yourself. Most people on Twitter right now are doing the usual thing. Longs want relief. Shorts want collapse. That's not analysis. We don't need a wish. We need the chart. First, the ceiling. I'm putting in the descending resistance now. The anchor starts up near the cycle peak, around 82,048, then comes down into the latest lower high. Watch this slope. A trend line has to earn your attention. Here, prices tagged this line more than 5 times and failed every time. That's a real reaction zone. I'm marking the cleanest rejections right here. Projected into the current chart, that resistance is around 65,199. That's the bull line, not a quick wick through it. I want a clean 4-hour close above 65,199 before I call that a trigger. Quick favor. If these levels help you plan the day, hit subscribe. I break down Bitcoin this way every single day. Now I'm moving down to the 1-hour. The 4-hour gives us the map, but the 1-hour is where the trade has to make sense. On the 1-hour, the recent range runs from about 61,938 up to 67,292. That's roughly 9%. Tight range, and right now price is hanging near the lower side. The fast-moving averages are not helping bulls here. The 20 is at 63,697. The 50 is at 63,989, and price is below both. That's bearish near-term momentum. Pretty simple. That gives us the short-term pressure. Now let's go back to the 4-hour and finish the bigger structure. Back on the 4-hour. Now the second line, the floor. I'm anchoring it at the swing low at 59,130 and pulling it up into the most recent higher low. This line also held more than 5 times. But here's the problem. Price is at 62,113 and we're already below it. So the diagonal support is no longer the fresh breakdown trigger. It's broken support, and broken support often flips into resistance. That puts 63,696 overhead as the level bulls need to win back. 2 trend lines are useful, but they're not enough by themselves. The edge improves when separate tools line up, and the Fibonacci retracement over the same swing is now part of the stack. Around $63,696, several of my levels start crowding into the same area. That's not a single magic line. It's a confluence zone. Different traders, different tools, same neighborhood. I'm dropping the horizontal there now, so the zone is clear. Now, for the bigger picture target. This pattern is about $15,528 tall from top to bottom. When structures like this break, they often travel that distance. That's the structural target, the swing move. I'll give you the tighter intraday entry in a second, but this is what the measured move is pointing toward. And the history matters here. I watched this setup play out, 50, 60 times? The interesting part is not direction. Direction is close to a coin flip. The interesting part is follow through. About 70% of the time, once it breaks, it completes the measured move. So you wait for the trigger, then respect the size of the move. So here's the trade framework. 3 paths. First path, bulls reclaim the line. A 4-hour close above 65,199. If that prints, my upside target is 80,728. That's where I'd be looking to take profit. Second path, Bears take control. A 4-hour close below 60,250. I'm marking that breakdown level now. To be clear, that's a separate horizontal breakdown level, not the 63,696 diagonal. The diagonal already broke and now sits overhead. Same math, flipped lower, give a target of 44,722. Stop goes just above the broken level. Keep the wrist tight. Third path is probably the boring one, which means it may be the most realistic. No clean close either way. Bitcoin just chops inside the range. If that happens, the trade is no trade. In compression, patience usually pays better than opinion. That's the whole framework. One route higher, one route lower, and plenty of chop between them. 3 clean levels. The chart chooses the side. Your job is to react to the trigger, not preposition and hope. Now for my actual plan today. It's a short setup. I'm on the 1 hour, and I'm drawing the entry, stop, and target now. I'm not shorting weakness way down here. I want to bounce into the 62,500 level first. Stop loss is 63,125, just above it. If that hits, the thesis breaks and I step aside. Target is 60,625. That gives a risk reward of about 3.0 to 1. And I won't force the setup. If the reward isn't clearly larger than the risk, I leave it alone. The math has to be there before I care. It also needs a confirmed close, not just a wick poking through. Risk 1% of your account, not your whole stack. If this helped you read Bitcoin today, hit the like button. It helps the channel, and it tells me these breakdowns are worth keeping in the rotation. That's my Bitcoin plan for today. Let the levels do the work, keep the risk contained, and don't chase the first candle that moves.